How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. Welcome to 2025, a new year, new trades, new liquidity draw. So this month for January, we'll be tracking US oil or crude oil. As always, we're going to go through our macros, our fundamentals, and possible some technicals and into market analysis on the first daily update for the month. So we're going with crude oil. So first and foremost, we have no seasonal tendencies yet for the new year. I think the new data and new charts will come out sometime next week. So when that comes out, we'll inform the channel about that as well. Outside of that, there's no interest rate differentials with crude oil. We're not comparing the rates of certain banks, but we could look at the intermarket analysis between like the dollar, UCAD, inversely correlated pairs, Canadian dollar futures. We could look at those things to give us a bigger picture, and we could take a look at natural price action. So first and foremost, as you guys know, I like to use a certain tool called IPDA look back data ranges. So we're going to come to the first official trading day of the month, which is here the second. Man, oil is on a breakout right now for the year. We're going to look back 20 bars, or essentially 20 days on the daily chart. So 20 bars would equate to 20 days. We'll mark that off. Go back another 20 days. Let's mark this off here. All right, that's 40. Go again. And we got 60. And then we're going to cast forward 20 bars from that first official day. And within the next 20 days, this is our playing field to potentially find a great trade opportunity, whether it's a swing trade or find great day trades within the next 20 days. Now, this market, every 20 days, doesn't matter what asset you're looking at, every 20 days, the market is going to be either going to produce a bullish trend, bearish trend, or it's going to be sideways. Now, sometimes there's a blend of both, and it looks like carnage. It doesn't look like the market is decisive. It's not going up really. It's not really going down. Odds are the market is stalling for the next following month to break out dynamically. So we'll take a look at the highest high we have within the last 40 days. We can't do the 20-day one because this would be the highest high we have in the last 20 days. It's still pending. So we'll go back to the 40. We already broke that today. So we broke buy side liquidity here. We have the 60-day high all the way up here, pretty much close to $79 a barrel. We got down here the 20-day low. And we got the 40-day low. And these lows are unbroken as well. And we also have the 60-day low. So those last couple months last year in 2024, so September, October, going to December, November, the market was just ranging and getting ready to break out. That's what it looks like right now, right? It rated a swing low, and then it printed a higher swing low, then another higher swing low, and now it's rating swing highs. Now the momentum is currently bullish. We'll talk about why the momentum bullish is in just a second. We have the opening price. January's opening price. So that's our natural indicator for overbought and oversold. So that's January's opening price. Anything above this is a premium, which we will find ideal sell conditions. Anything below this price point is a discount where you'll find ideal buy conditions. Now, that doesn't mean you can't buy in a premium, though it's not ideal. And it doesn't mean you can't sell in a discount, though it's not ideal at all. So right now, some scenarios that I can think of, right? If gold, if US oil is trending higher, we're going to most likely see higher swing lows, higher swing highs, and candles print down and trade away from it. So if we get a down close day and a bullish trend that's forming, it could be a signal to traders that, hey, tomorrow might be a dynamic buying day tomorrow, possibly intraday. Now, right now, we broke this swing high, broke these more recent swing highs here. So that's a swing high. We also have a swing high here. Right, we also another swing high here. We can mark them all off, but these levels here is where buy stops were residing. Price ran out those buy stops, and now could potentially continue to push this bullish momentum or this structure that we're seeing going to the upside. Price is more than likely going to want to print a higher swing low if the scenario and the condition is higher price action. So first and foremost, let's write that down. So right now, price broke swing highs, right? Which would make us what? Bullish, because it's a bullish idea. Just first and foremost, right? It could be a false break idea, but this is my neutral stance. Breaks a swing high, okay, we might be looking to lean towards that, all right? Unless other things are telling me this is a false break on these highs and they're going to go short on traders. Secondly, what I would do is, right, we would wait for a higher swing low, right? This is where we're going to continue to find a opportunity to get into that trend or get in sync with the commercials. So while the commercials are pushing price higher, retail traders could be potentially shorting or more obviously chasing price because pretty much oil is on a breakout from the beginning of the year so far. It just broke out. That was the best buy at the open, was the best buy for US oil currently. Now that's hindsight now, but if we wanted to get into that trend, we'd probably wait for a higher swing low. That's me personally, and me finding confidence of, okay, higher swing low. Now, where would this higher swing low form? That's a good question. It could form inside some type of PDA array. So it could form on a down close candle, right? Then maybe this bullish order block, maybe an old high, maybe a fair value gap. So we got a few here. Right, we got one there. We have another one here. And if I want to catch a long on US oil, I would prefer to catch the long below January's opening price. But there are times where the market breaks out and doesn't give traders another opportunity for discounted buys or discounted longs. It happens, right? Those long opportunities where the ideal buy condition is being shown doesn't last long to retail traders. It might present itself maybe for like 2 or 3 days, maybe 4 times, right? But at most, it's very quick because they want the market to not be cheap anymore. They want to move price fast. And if we get a retracement into here, we could possibly see that higher swing low somewhere within this region. Whether that's that down close candle, whether it's this fair value gap or that one, within this region, I would like to see maybe a higher swing low. Not saying we could get it. It's just a scenario, right? I'm trying to be a visionary here. I'm trying to paint a picture to you guys here. Now, furthermore, some things that we could look into is the DXY. The DXY tends to be positively correlated with US oil. At times, they will move in opposite directions and be out of sync. And at times, they'll be together, right? If oil goes up, dollar goes up. If oil goes down, dollar goes down. Not saying it's a perfect correlation, but there is some type of correlation there positively. So let's take a look at the DXY real quick. DXY is still pushing up higher, as we can see, right? Since December, it rated that swing high, didn't produce a higher swing low. Instead, it ran down, faded, made another false break. So double false break. So false break to the upside, get retail traders long, false break, get retail traders short. Now they create a stance, they protect this swing low and push prices pushing higher. Now, when I say protect, I'm just meaning that odds are they didn't run it. That's why I have the shield there. They didn't run this swing low. They printed another higher swing low. You see that? That's what I'm pretty much looking for US oil to do. I want them to print another higher swing low. Notice this higher swing low does not form below December's opening price. So not every time when you want to get into the market trend will you be buying at the ideal or best condition. You just got to live with what the market is currently giving you. And then the market tended to push up, broke the high of the year in 2024 and made the high of the year over here. So this is the last day of 2024, and that was the high of the year. And price continued. Now here, 2025, prices right now still pushing up higher, continuing that trend. So we'll see if dollar is going to continue to push up, or is it going to retrace and create a new trend for the start of the year? Maybe January, February sell off. Who knows, right? Just speculation. But as of right now, the stance is bullish until further notice. When those seasonal charts come out, we'll try and take a look at it and see what we can paint as a roadmap for the year. Now, outside of that, we could also look at UCAD. What is UCAD doing? Is UCAD showing the same signs as USO in DXY since they're positively correlated? Yes, it is. We can see right now, I don't like to state it, looks like a bull flag, right? And I'm not a fan of retail patterns, right? Looks like a bull flag, prices getting tiny, tiny, small range. Then a large range is going to break out. They're going to probably look for the breakout retest and go long. That is one scenario. Now, I'm not always saying retail traders fail and the systems that they use isn't guaranteed. There are times where it does work, right? The bull flag is seen, the bearish flag is seen, right? But there are times where we get a false bull flag and they fade it, or we get a false bear flag and they rally it. So be aware of that. We can see the last down close candle here as well in this bullish trend was very responsive. The last down close we had was Monday the 30th, 2024 in December. This down close candle closes below a previous daily low. And you can see after that close, the next day it runs that low and then turns around really quickly. So this could be another swing low that's going to make the new leg to go higher into January so far, or whatever trend is unfolding. So maybe we get up here, take out this swing high, take out this swing high. This buy side here is pretty clean. So odds are price is probably going to keep pushing that way. Dollar is really strong right now. Now, outside of that, we could also look at the CAD futures. Take a look at that real quick, and then we'll summarize and end it off. Keep it very simple. Very inverse to what UCAD is doing or what dollar is doing, right? CAD is going down. You can see as well that same day, that Monday for UCAD was down, and we saw the rallying going into the new year. This one's inverse. You can see on Monday, it's an up close candle. It closes above an up close candle. That could be a signal to go short. Because if the trend is down, selling after up days is normally going to be your best friend. Just look at hindsight. It's your best friend to learn. Just take a look at this leg that's going down And just pay attention to every time we print an up day, it's normally met with selling if the trend is bearish. And as you can see right now, it's up close, and CAD right now is pushing pretty much at the lowest of its day right now going into the year. It's selling off. And it's going to aim for what? Probably this swing low here or even this swing low here. Sell side liquidity. And this is also that retail, not drawn to scale, of course, because I don't trade like this, but you got that bearish flag, breakout retest, go short. Retail traders could be getting that right if that's what they're looking for. I personally don't look at that. We look at price action and we use different natural signals, but that could be happening here. Canadian dollar is depreciating. The rates are not the strongest against the Feds. So maybe oil is going to get stronger. DXY is going to get stronger. So let's bring it back home again, just to recap before we end. So right now, oil is pushing up. We're going to wait to see if we get a higher swing low. Some scenarios that we could get a false break because we just ran the 40-day high. What if price does want to retrace and then start a new trend back down? Not saying this is drawn perfectly to scale, but something like that. Up, down, lower swing high, lower swing lows. It sells off, gets down to those clean lows down here. That's a scenario. Or we get price going what? Sideways. Lethargic, doesn't really do much. It's always rating a swing high, then rating a swing low, then running back inside the range. It doesn't do too much. Maybe the following month it's going to be dynamic and then give us a movement that we're looking for. It happens. It's not always going to be perfect. The pair that you're tracking for the month, though you may have a filtering process, doesn't mean that pair specifically for that month is going to take off. You do have to look at a full picture analysis and look at the higher time frame chart and see, hey, is this month going to be the month where it pops off and gives traders dynamic movement? Because that's where traders are going to most likely find better trading opportunities when the market is moving and trending, not moving sideways. We like when the market moves sideways or is in consolidation or is in a small range, is not as excited and dynamic because we know in the future, sooner or later, that large range or that dynamic price action that we all are looking for, right, is going to come. So when the market starts to get quiet, that's when you need to be the most attentive. Be concentrating on what you're looking for and have that discipline to be like, you know what, I'm not going to chase price. The market's not doing too much. I know sooner or later the market's going to give me something where I can place my entry and hold and catch that wave. Another scenario we can get is that bullish trend. So price breaks up and there's a continuation higher, right? We're going to look to buy the dips. We're going to look to buy the down close candles. We're going to look to see if price is going to respect discount PDA raise and move higher. So hopefully you found this insightful. Peace.